Signs you're doing great financially, even if it doesn't feel like it.
That's the critical piece. The Hamilton Project data noted that renters generally report greater financial anxiety compared to homeowners. So while buying might increase your monthly outlay at first, the stability and equity buildup seem to reduce overall financial worry for many people.
It's a trade-off, immediate cash flow strain versus long-term psychological security.
Exactly.
Now for the strategic fine print of wealth management taxes. We need to look ahead to 2026.
The material focuses on the very real projected IRS inflation adjustments for 2026, which are essential for planning. These adjustments are automatic and they're consequential.
What are the key adjustments we need to be preparing for right now?
We're looking at changes across the board due to inflation indexing. The sources detail specific 2026 adjustments, including anticipated increases to the standard deduction, tweaks to the tax brackets, and changes to capital gains thresholds.
And the alternative minimum tax, the AMT.
And the AMT exemption amounts. This requires active year-end planning now to maximize savings before 2026 begins.
Okay, let's get into the specifics of that. We've got the source, 10 ways to maximize your tax return in 2026. Let's break down that expert checklist.
Absolutely. Let's distill this down. First, develop a comprehensive tax baseline. You need to know your marginal and effective rates to forecast the impact of future income.
Know your numbers.
Second, optimize your compensation. High earners should look at things like deferred compensation to shift income out of high-tax years.
Third is probably retirement plans.
Of course. Maximize your contributions to 401ks, IRAs, HSAs. For anyone in their 30s, 40s, or 50s, it's the easiest way to immediately cut your taxable income.
Okay, what's fourth?
Minimize your alternative minimum tax, or AMT, exposure. As the exemption amounts change in 2026, you need to be careful about timing deductions and especially exercising incentive stock options, which is a common trigger.
Fifth, harvesting capital losses.
A classic. If you have investments that are down, sell them strategically to offset capital gains you've realized.
Sixth and seventh seem to be for business owners.
Right. Leverage R&D tax credits. Many small firms qualify now. And utilize amortization options for those R&D costs, which can provide greater long-term benefits.
Number 8 is maximizing small business deductions in general.
Right. Track everything. Use Section 179 for equipment. Ninth, manage your charitable giving strategically. Think about donor-advised funds to front-load deductions in high-income years.
And finally, number 10.
Revisit the Roth versus traditional debate. For younger professionals expecting higher income later, maximizing Roth contributions now while your tax bracket is lower is a critical long-term play.
And all of this planning has to happen well before the end of the year.
The sooner the better.
That tax detail is incredible.